All right, so it's 9:35. Welcome everybody. It's an amazing evening. Thank you so much for joining us on this session right now tonight. Okay, so here tonight we're going to be talking about how to find your edge. All right, how to find your edge in the financial markets as a trader. All right, I'm sure that many of you, when you came into the markets, or when you started learning Forex, one of the things you must have heard people say a lot must have been, you need to find your edge, all right? You need to figure out your edge, all right? You need to find out your edge in the financial markets. And a lot of us get stranded in that, in that circle or in that loop, because we don't even know what our edge is, all right? And yet we keep hearing that statement, find your edge, all right? So the purpose of tonight's session or tonight's class is to help you understand, first of all, what an edge is, or what the edge is, all right? And thereafter, we'll be able to start talking about how you can be able to actually figure out your own edge, all right? How you can figure out your own edge in the financial markets. So having said that, let's get right into what we're going to be talking about tonight. Okay, first things first, when we talk about a trading edge, all right, when we talk about your trading edge or your edge as a trader, all right, what we're simply referring to is what makes your own trading style, all right, the content of your trading style, the things that makes your trading style particularly important. Okay, when we talk about finding your edge, we're talking about the things that stand out, all right, the things that make you unique, all right, that make your own approach to trading different from every other person's approach, all right, and that's what we're going to be looking at tonight. But right before we get into some detail, all right, it's important that I explain some certain things. First of all, a lot of newbies, all right, when they come into the financial market, one of the things that they are so, concerned about is they want to learn the latest strategy, all right? The latest strategy or the most popular strategy. All right, are you guys with me? They want to learn either the best strategy, the most popular strategy, or the one that is newest in town, all right? Because they just want to hear something new. And as a result, what ends up happening is that they get carried away because they no longer pay attention to the things that really matter. All right. And this is why it's important to understand what we're talking about tonight, because what we're talking about tonight can make a difference between, you trading as a newbie, all right, and you trading as a professional. To start off tonight's class, I'm going to ask one simple question. Okay, in your opinion, I want you to type which strategy you think is the best trading strategy ever. All right, what is the best trading strategy that you feel is the best in the world? All right, just type that in the comment section on the group, okay, and then we will go on from there. So what do you think is the best trading strategy? All right, whatever you think that is, type it in the comment section in the group. All right, guys, I'm waiting. All right, Dr. Bill's strategy is the best strategy, okay? Keep it coming, guys. I want to know, what do you think is the best trading strategy in the world? All right, or the best trading strategy ever? All right, so keep it coming. You guys just type it in the comment section. I'm really interested. Okay, Ayobami, you said none. Okay. So those who are just joining us, you're welcome, guys. We're just discussing here tonight. So Karen, what we're talking about right now is we're just starting, okay? But what do you think is the best trading strategy in the world? All right. What's the best trading strategy that you've come across? I want you to type it in the comment section on the group. All right. Just let me know what's the best trading strategy, or what you think the best trading strategy actually is. Okay, the one a trader is accustomed to. All right, guys, please keep it coming, keep it coming. I want to hear your opinions, all right? Just type it in the comment section. What do you think the best trading strategy is, all right? The best trading strategy that you know or that you've heard of or that you've seen anywhere, all right? I want you to type it in the comment section quickly. Keep it coming, please. Oh, just type it in the comment section. What is the best trading strategy that you know of or that you've come across? Okay, in order not to take too much of your time, all right, we're going to get into it. I can see quite a number of opinions. Now, a lot of people will talk about the fact that, oh, the best trading strategy is SMC. All right, some will say, the best trading strategy is, the best trading strategy is candlesticks. All right. Some other people will say, yes, the best trading strategy is ICT. All right. And then you hear people say a lot of things, you hear people say a lot of different things about the strategies that they have heard or that they know about. Okay. A few of you have said Dr. Bill's strategy. That's cool. All right. That's cool. So tonight we're going to try to understand what makes a strategy successful. All right. What exactly is responsible for a successful trading strategy? All right. And thereafter, we'll look at how you also can have your own successful trading strategy that works for you. All right. How you also can have your own trading edge. All right. Something that works for you. Now, the reason why I'm saying this is because after tonight's class, I expect that everybody watching this or listening to me right now is able to begin to go through a process of discovery. All right, is able to go through a process that enables them to awaken to their strengths. All right, that enables them to wake up that part of them that has what it takes to be successful. Okay, so we're going to be starting with, the first content of any strategy. All right, whatever it is, any strategy that is going to work, any strategy that is actually going to deliver, any strategy that is going to produce results, all right, it is compulsory for that strategy to do two things or three things. Here, let me say three things. Are you guys with me, please? Are you guys sure you're with me? If you can hear me, just drop an emoji in the chat. All right, let me be sure that you guys can hear me loud and clear. All right, beautiful. Shop with Genevieve. You said you want to say something. All right, unmute yourself. Let's hear you. Shop with Genevieve. Do you have something?
Nothing. My hand is taking pressed. I'm sorry.
Oh, all right. No problem then. No problem. Okay, so any strategy that is going to work, all right, that is really going to deliver profits to you, must do three things. All right. Now, I know that smart money concepts is beautiful. You want to learn it. I know that there are a whole lot of trading strategies that you want to learn. All right. However, the truth is, many people have too much expectations. All right, too much unnecessary expectations. All right, I've seen people who have learned smart money concepts, and within the first 2 weeks, they are trying to start taking trades with 8 pips stop loss, with 13 pips stop loss. All right, and the truth is, that will not work. Okay, because if as a newbie you're just starting out and already your focus is on, I want to be able to trade with 15 pips or with less than 10 pips stop loss, you would have done yourself much more damage, because at the end of the day, you will have so many trades that will not go your way. All right. So many trades will not go your way because your stop loss is too small and your entry may not exactly be as perfect as it was supposed to be. Okay. So having said that, the next thing we want to talk about is, one, any strategy that will work for you must be able to show you the direction of the market. All right. In order for a strategy to work and deliver profits for you, all right, it must be able to show you the direction of the market. All right. Number two thing, it must be able to show you the entry and exit. All right. And three, any strategy that will work for you, all right, must be something that is consistent. All right. It must be consistent. Now, why am I saying this, or why are we looking at these things tonight? The answer is simple. One, in order for you to be able to make profits, all right, it's important that you know what direction the market is going towards. All right, it's important that you know that, because unless you know that, all right, it will be difficult for you to be able to decide what your entry point should be. All right, if you don't know that, you will not know where to enter your trades from. That's one. Two, when you don't know the direction, all right, it will be difficult to know where to place your stop loss and take profit. All right, your risk management will not be fruitful because you don't even know how to manage your risk at that point. All right, so it's important for you to know what direction the market is going. That's the first thing. All right, and the second thing, your entry and exit must be important. All right, it must be able to show you clearly, enter from here, all right, and close your trades here. All right, and then the third thing is that it must be consistent. All right, it is important that whatever trading strategy you're going to be using must be consistent. All right, next thing we're going to talk about is how to identify your trading edge. All right, how to identify your trading edge. And the first thing we want to talk about is you must understand your temperament. All right. When it comes to understanding your trading edge, it's important that you have a good understanding of your temperament. Why did I say this? If you are not a very patient person, all right, if you are naturally not a very patient person, it will be a waste of time for you to try to be trading as a swing trader. All right, if you're not very patient, okay, then it means that swing trading strategies may most likely not work for you. All right, because you will not have the patience to wait for it to play out the way it is supposed to. All right, that's the first thing. You want to be able to know your schedule. All right, and this one is really important because many people, especially if currently you're trading part-time, all right, if you're currently trading part-time, it means that you don't have a whole lot of time to sit behind the charts and analyze the market and do a whole lot of figuring it out, all right, refinements and all of these other systems that people talk about. Okay, so if you don't know what your schedule is like, all right, or if you have not figured out how busy you're likely going to be, all right, you may not be able to know what strategy works best for you. Now, why am I saying this? I'm saying this because when it comes to schedule, especially if you trade part-time, all right, if you trade part-time, one really important thing is to look for a strategy that doesn't require you spending so many hours behind the chart. All right, if you are not very if you are not very available to do all of this analysis, okay, that's the first part. Are you still following me? Two, if you are someone who is full-time available, all right, you have your whole time to yourself, okay, and then you can spend that entire time studying the market. You can spend that entire time trying to analyze the market. Then in that case, you can easily want to work with strategies or systems that that you can commit your time and effort and energy to. All right, that works. So when you know your temperament and your strategy, these are two things that can assist you. Okay, these are two things that can help you understand what your trading edge will likely be. That's two. Number three thing you want to be able to understand is you want to be able to figure out, all right, you want to be able to figure out your risk appetite. All right. And this is really important because when we talk about risk appetite, even if you teach two different traders, the exact same strategy, all right, if you teach two people the exact same strategy, they will never have the exact same results. All right. Two different traders cannot have the exact same results from the same strategy. Why is that? It's that way because their risk appetite is very different from each other. Okay? And when your risk appetite is not the same, your results will be different. Now, one of the reasons why you guys on this call right now, one of the reasons why you may have difficulty getting doctor's kind of results, all right, why you might have problems getting Dr. Bill's kind of results is because you don't have his kind of risk appetite. All right. You don't have the kind of Dr. Bill's risk appetite. And because you don't have that kind of risk appetite, all right, your results will definitely be different. Definitely. All right. If you're getting or if you're understanding what I'm saying tonight, all right, can you just drop an emoji in the chat box? Let me be sure that you guys are getting me correctly. All right, beautiful. Thank you. So what we're talking about, all right, so far is how to identify your trading edge, and we've talked about temperament, we've talked about schedule, all right, we've talked about temperament, schedule, and right now we're talking about your risk appetite, all right. Some of you know traders that seem to be performing well, all right, that seem to be performing better than you, even though you have the same strategy. The reason is because your risk appetites are different. All right. Why am I saying this? Some of you see Dr. Bill's statuses and, rather than get motivated from it and work on yourself, some of you get oppressed by it. All right. Or let me say, some of you get ambitious. Yes, that's the word. Some of you see results like that and you suddenly become excessively ambitious. All right, so much that you want to start getting those kind of results from now. The truth is, if you were to sit Doctor down, all right, and ask him about his own experience, you realize that it didn't start out this way, all right, with, this kind of results. And the reason is because the more your confidence grows, all right, the more you can now leverage on your risk appetite. Okay, because now you're more confident about what you're doing. Okay, and then it becomes easier to risk more. And another reason why, people like Dr. Bill's, and some other traders, popular traders that some of the reasons why you see them have, heavy trading results, all right, it's not really because they have a strategy that is 100% accurate. In reality, no trader has that. Okay, what they simply have is that they have a margin of funds, all right, that they can leverage on. For example, Dr. Bills can create an account, fund an account with $100,000, all right, fund it, put whatever lot size he wants, all right, maybe 5 lot size or 10 lot size, okay, and he gives you that same signal, the same trade, he gives you the exact same signal. The truth is, even if you add a $100,000 account, all right, you may not be able to use the kind of lot size that he will use. And the reason is because he owns the strategy. He knows what makes the strategy work. All right. And as a result of that, he is the one that is confident about his strategy. Are you following me? And I'm saying this because some of you guys are going to need to go back to your drawing board, all right, and figure out what makes a strategy work for you. Okay, so we've talked about temperament, we've talked about schedule. Right now, we're talking about risk appetite, and we've just talked about the fact that figuring out your risk appetite will help you avoid unnecessary work. All right, so much that you will not be envying people unnecessarily. All right, so that's as far as risk appetite goes. Then number 4 thing that gives you a trading edge, all right, that improves your trading edge, is that as a trader, you must rest a lot. Now, I know that this is not something that many of you are expecting as something that would affect your trading edge, all right, because you've been told traders don't sleep. Oh, sleeping, you are broke and you are sleeping so much. You don't need money. You have to keep grinding. You have to keep working hard. The truth is, the longer you spend awake, all right, without sleep, the more distorted your decision-making mechanism becomes. All right. When you spend several hours awake, all right, your ability to make accurate decisions becomes faltered. All right. So the accuracy of your decisions become affected. All right. Quickly before I go on, if what I'm saying tonight, if it's making sense to you, can you just drop an emoji in the chat box? All right. Let me know that what I'm saying is not a distant reality from you guys. All right, beautiful. Thank you. So what we're saying here is you want to be sure that as a trader, your brain, because it is your brain that is doing this work. All right, the majority of the decisions is coming from your brain. And if you don't rest your brain well, your decisions will be faulty. All right. And that's why you observe that sometimes after waiting for a trade, for a setup for hours, all right, when the setup finally materializes, you no longer have the patience to wait and be sure that all your confirmations are aligned. All right. Because at that point, your thinking faculty or your psyche has already been demoralized because your body needs sleep. All right. Why am I saying this? I'm saying this because some of you believe that, oh, the longer you stay at the chart, all right, the better your opportunities. It can be true. However, not always. All right. Your trading career has to be a very good blend of both work and rest. All right. You cannot, it's like, what we actually do as traders, all right, is actually more mentally tasking than what bricklayers do. All right. Because bricklayers use their bodies and, they don't need to put a lot of thought into what they are doing. All right. But you as a trader, your brain is what does the majority of the work. All right. Your brain does the most of the work. And in reality, your brain consumes a whole lot of your energy. That's why you see that sometimes after you have stared at the chart for a while, by the time you realize that you are hungry and you sit down to eat, you end up eating a whole lot. All right. And that's because your brain needs that meal. All right. And that's one reason why, for me, I appreciate what Doctor does a whole lot, because some of you see that he takes, soft drinks and, energy drinks from time to time. You may not understand, but it's because this line of work, your brain needs energy to think well. All right. Please note that your brain really needs energy to think well. All right. So this is also one of the things that affects your trading edge. The longer you stay without rest, all right, the more flawed your decisions become. All right. Because your brain can no longer process information thoroughly. It just wants to rush and go on to the next one. Just quickly rush and go on to the next one. All right. Then the number 5 thing that we're going to be talking about when it comes to trading edge is this. Don't trade on borrowed funds. Don't trade under pressure. All right. Now, this may sound funny to some people, but in reality, it will help some of you on this call tonight. All right. You need to know that you are not trading on borrowed funds. All right. I've seen people who have gotten LAPO funds to trade with. I've seen people who have taken investments and done stuff, even at the early stage of their career, all right, because they are just in a hurry to make some money. Please do not do that, all right? I've seen people take money from investors, promise them 30%, promise them 40% per month. The reality of the matter is you are going to be doing a whole lot of damage to yourself, all right? Personally, I've worked with some of the best investment firms in Nigeria and some abroad, and I have never seen any of these firms that has promised anything higher than 20% in a year, all right? You can go and check what I'm talking about right now. BlackRock is an investment firm, all right? In fact, it's the world's largest investment firm. They will never promise their clients anything. In fact, one of the highest investment products that they have only pays 8%. 8% per year. All right. But some of you here, you are on Signals group, the VIP group, or whatever group you're on. All right. You've made 10% in one single day. You've made 8% in one single day. But you still don't close out. All right. Or you still look for more because you feel like, it's too small. It's too small. Please don't do that. All right. Don't trade under pressure. Don't be looking for trades that you will take so that you can pay your rent. All right. If you have a rent to pay of, say, like 600,000, you have 300,000 or 400,000. Don't bring it to Forex and say, oh, I want to quickly make 200,000 naira extra. And they've taught us how to trade. I know how to draw support and resistance. Please don't do that. Please don't do that. All right. Because what you will end up doing is that you will cause yourself to lose confidence in Forex. All right. Because when you've taken losses or you have lost money that was really important to you, all right, at the end of the day, what happens is that you will lose confidence in Forex. You will never want to learn Forex again. All right. And at the end of the day, you would have missed out on one of the best vehicles for financial stability ever. All right. One of the best vehicles for financial stability. All right. And then the sixth thing we're going to talk about when it comes to identifying your trading edge, we're still going to go into the charts and show you a couple of things. All right. The sixth thing is you must accept. You must accept that you don't know everything. All right. Let me put it as the humble. All right. It's important that you are humble to know. All right. Or to admit that you don't know everything. Why did I say this? All right. Some people here, all right, I'm sure that there are people like that on the call right here tonight, all right, who already feel like, this strategy that I have learned, all right, is the best in the world. It's the best in the whole wide world. And that was why I asked that question when we started. All right. What is the best strategy in the world? The reality is there is no best strategy in the world. And that was why I've shown you here tonight that, you know, the strategy that works for you is dependent on these 6 things. All right. Whatever strategy is going to work for you is dependent on these 6 things. Your temperament, all right. How patient can you be? All right. Your schedule. How busy do you usually get? All right. Your risk appetite. How much do you have to risk? All right. And how will that risk affect you? All right. Another thing is your rest habit. Okay. Your rest habit. How often do you rest or how well do you rest? Okay. And then, avoiding pressure is also a very important aspect to helping you build a system that works perfectly for you. All right. So if what I'm saying is making sense, just to be sure that everybody is following or at least we're getting some traction. All right. Kindly drop an emoji in the group again. Let me be sure that you guys are following. If what I've said so far has made some sense to you, kindly drop emojis. All right. Beautiful, beautiful, beautiful. Keep them coming. Keep them coming. All right. Fantastic. Beautiful. So I think we can move on from here. All right. Now we're going to be talking about how to create your own strategy. All right. How to figure out your own strategy. Okay. How to figure out your own strategy. And that was why we started this session by talking about what makes a strategy successful. All right. We started by talking about what makes a strategy successful. And we've talked about the fact that the first thing that makes a strategy successful is the direction. All right. Any successful strategy must show you the market's direction. All right. It must show you the entry and exit. All right. And it must be consistent. What do I mean by consistent? It must have, rules. It must be based on rules. All right. Let me put it like this. It must be rule based. All right. It has to be rule based, because if you cannot break your strategy down into steps, all right, this is what I do first, then I do this, and then I look for this, and when I find this, I trade this. Okay, your strategy must be something that you can break down. You must be able to break it down into simple steps, into a step-by-step process. All right, what comes before what? What do you do after what? All right, all of these things are very important and very crucial to your trading performance or your trading success. All right, so having said that, I'm going to be showing you a couple of strategies. Some of you may not agree with some of the strategies that I'm going to show you or some of the things I'm going to say tonight. But for those of you who will hear me and hear me well, without misconceiving the things I'm going to be sharing tonight, all right, you're actually going to be putting yourself in a space that guarantees you have the edge to be successful in trading or at trading. All right. Now, the first thing when it comes to direction is this. When it comes to creating a strategy, you must have a system that shows you the direction. All right. So here now we're going to be talking about some of the most popular strategies, all right, that you guys know. All right. We're going to be talking about them and we're going to be explaining them on the basis of these three things. Okay. We're going to be starting, the first one we're going to talk about is smart money concepts. All right. I'm starting with smart money concepts because this is Dr. Bill's smart money class. And I know that a lot of people that are on this group right now or on this call right now, at one point or the other, you must have heard about smart money. All right. So when it comes to smart money concepts, how do we understand or how do we figure out the overall direction? All right. The answer for that is market structure. All right. When it comes to smart money concepts, we know the overall market direction using market structure. All right. So let me see if I can write that here. All right. Market structure. However, for some other people who trade with indicators and the likes, all right, you can have somebody who uses moving averages to understand the overall direction. Okay. Another person might be using Imoku clouds, all right, or whatever other factor they have. All right. Some Bollinger Bands, some use what's it called now? What's the name of this indicator? Some use what's the name of this channel indicator? Keltner channels, yes. Some use all of these tools, all right? Now, it's not about what tool you use per se, all right? It's about how fast does your tool, the means, your means of identifying direction, all right, or trend. How fast does it react to direction? All right. How fast does it react to a change in direction or to a shift in direction? All right. When market direction changes, how quickly does your directional tool, how quickly does it notify you that, hey, bro, the trend has changed? All right. And that's one of the things that you want to be conscious about. You don't want to have something that tells you so fast, all right, but at the same time gives you a lot of noisy signals, all right. So you want to have something that gives you a very solid or a very soft blend, all right. It's not too fast, it's not too slow, but at the same time it delivers. Okay, that's what's really important. Okay, so let's say as far as smart money is concerned, we use market structure to identify direction. When it comes to entry and exit for smart money traders, all right, we have a whole lot of things that we use. And I'm going to start with entry. when it comes to entry on smart money, all right, you're looking for things like inefficiency, FVG, or imbalance, all right, and then you're looking for order blocks, you're looking for liquidity grab, all right, and then from liquidity grab, you're looking for order block refinement to the lower time frames. Okay, so that's when we talk about smart money concepts, all right, when we're talking about SMC. We're talking about SMC, all right? So we're talking about liquidity grabs. We're talking about imbalance, FVG, or inefficiencies. We're talking about you looking at, the supply and demand. You're looking at the market structure, break of structure. So all these things sometimes can become cumbersome, all right? Because you are having to check so many different things that, sometimes you may not remember all the steps, all right? Or you may not remember all the factors that you're supposed to check for, all right? It happens, okay? And another thing is when it comes to smart money concepts, our exit is also based on, all of these things that we have talked about. Our exit is based on liquidity grabs, based on, order blocks, based on market structure, based on so many things, all right? So many different things, such that sometimes price would have reversed, all right? And you will not know on time, okay? You wouldn't know on time. And that is why, for those of you who are on this call tonight and you're familiar with Dr. Bill's trading strategy, one thing I'm just going to say to you tonight is whatever you're doing, all right, whatever strategy you're learning, find a way, or let me put it like this. Don't despise somebody or don't despise a trader because you saw that that trader is using an indicator on their chart. All right, because some of you, whenever you see indicators on charts, you begin to feel like, this guy don't even sabi anything. I know more than this guy. Me, I trade naked chart. The reality is, all the naked charts that you have traded, all right, how many Bugattis have you bought? Okay, how much have you saved up using just your naked price action? Why did I say this? I have been privileged to have worked with people who trade for bureau de change, who trade for banks, all right, and investment houses. I've also traded for investment houses. And the reality is, when you are trading large volumes of money, right, really, really large volumes of money, I'm not talking about $5,000, $10,000. I'm talking about trading amounts like 500K and above, all right? You don't have time to be drawing order blocks. In fact, you don't even have the energy to be using small stop loss. You don't have that energy to use 8 pips, 10 pips stop loss. Reason being that if trade ever hits your stop loss, all right, you're going to be losing so much money. On a single trade, you could lose as much as $40,000. All right. So you are not looking for, my stop loss is the smallest. This trade that I took. All right. And some of the things that we do when we trade large sums of money is we work with systems like martingale. We work with systems like edging. All right. Instead of using direct stop loss that is 8 pips or 10 pips. All right. Having said that, I want you to pay attention to whatever system you see that is working for 1%. All right. If it's working for 1%, it can work for you too. Okay. It can work for you too. So coming back to entry and exit. All right. When we talk about smart money concepts, for our entry and exit, we use liquidity grabs, other blocks, and all of these other factors that if you go through the videos that are already on this Telegram channel, all right, if you go through all of the videos, you will see that we've covered a whole lot of things regarding smart money, all right, from the very first class on this platform, okay? So you will see all of the confirmations that we use when we want to trade smart money, okay? But when it comes to maybe using moving averages for direction, all right, this is where when it comes to using indicators, all right, you want to use trend-based indicators for identifying the trend, and you want to use oscillators for your exit. All right, let me quickly write that on the board. All right, trend-based indicators for direction. All right, and then oscillators for entry and exit. All right. Now, what are oscillators? Oscillators are indicators that show you the market cycle. All right. Indicators like the stochastics, indicators like the MACD, indicators like the moving average oscillator, the ADX. All right. All of these indicators can help you understand. All right. Can help you know, okay, if the overall direction is bearish, I am simply looking for sell entries. All right. And an oscillator can tell you when that sell entry is right. Okay. And that's why if you've gone through that video that Dr. Bills did the other time about his trading strategy, you notice that one of the important things is, first of all, identifying the trend. All right. Identifying the key levels. All right. And after identifying the key levels, the next thing is you want to find entries and exits from your key levels. Okay. And that is where the stochastics indicator comes in. All right. So when you trade with indicators, you have a system that guarantees or that signals your entry and exit much quicker sometimes than waiting for market structure. All right. Remember, you are looking for something that helps you get in as easily as possible. Yes, oscillators help you for entry and exit. They tell you when to enter and exit based on the trend that you have seen from the trend-based indicators. All right. So the oscillators help you define your entries and exit. Now, why did I say that? Now, when it comes to the third criteria, which is the consistency, I think that trading with indicators is the most consistent way to trade. And I'm not capping right now. All right. I'm really not capping right now. Trading with indicators is one of the most consistent ways to trade. Why? Because indicators are built based on mathematical formulas. All right. They are created based on mathematical formulas that have been working since as far back as when the Forex market or the candlestick chart was created. All right. You see an indicator that's been working for over 200 years. All right. Something like the moving averages and the MACDs. All right. You see indicators like this that have consistently worked for people for over 200 years. All right. It means that right now, there is no reason for you to feel like, oh, will this thing work for me? All right. Indicators are consistent. You just need to be able to figure out how to put them together, how to modify them to suit what we have said before. Your temperament, your schedule, your risk appetite, all right, and other things involved. All right. So you just need to know how to set up the indicator system. All right. How to set it up in a way that it doesn't choke you. All right. Every single signal that it gives you is a signal that can be broken down based on rules. I'm going to show you an example quickly. Now, this was a trade that I took on AUD card. I think I gave it to some of my guys on AUD card, all right, just this week. Now, initially from Smart Money, I'd already defined that price was going lower. All right, I'd already discerned that based on what I saw already. Right, we already had this, then the break of structure. All right, we already had the imbalance. Okay, we had the imbalance. We had the other block. Price came back to it, gave this initial drop. All right, then what do you notice next? Price simply came all the way back to that point again. All right, and at the point where it came back to the other block, we can see that the stochastics indicated that, yes, it's time to start selling right now. Okay. The first point, all right, we got a signal, an entry signal from the stochastics. All right. And we got our exit signal as well. At what point did we get our exit signal? We can see right here that the stochastics was oversold and it began to cross back up. All right. So you'd have closed on this candle. Whereas waiting for market structure would have meant that you would have been taken out at break-even. All right, this trade would have most likely closed at break-even. Why? Because you didn't exit early enough. All right, you didn't close out of that trade early enough. All right, and that's why I'm showing you tonight how you can be able to use indicators in a safe way, all right, that wouldn't hurt your account, but at the same time, you would be making a lot of money. Okay, so this is currently one of the simplest strategies that I have ever come across. It's a personal strategy that I use for my own trading personally, all right, personally right now. And it has not failed to deliver, not even once. All right. This was another trade that I gave out, I think, last week. All right. We had a breakout structure already. All right. We had this week here. All right. And then the other block, price came back to the other block. But what do you notice we had on the stochastics already? Moving averages are bearish. And then we see a cross on the stochastics right over here. All right, and that means that we would have entered our trade all the way from here. All right, and we would have recorded close to about let me check that right now. All right, let me see. This would have been about 100 and something pips. All right, from this particular point here. From this particular point here, over down, yes, 102 pips. All right. So this is how I personally trade right now, even though there is hardly any strategy you want to talk about that I don't know. All right. Whether it is Elliott wave, whether it's white curve, whether it's smart money, whether it's institutional inner circle trader, ICT. All right. Whether it is Ichimoku clouds, whatever strategy you want to mention. All right. I can almost say that I am already very familiar with it. Okay, why am I showing you this? I want you guys to stop chasing unrealistic things. All right? Stop chasing unrealistic things in the sense that stop looking for a strategy that looks good on paper, all right, but does not look good in your pocket. I don't know if you guys understand me. Please, if what I'm saying is making sense, can you just drop an emoji? Let me be sure that you guys are flowing with me and I'm not just ranting here. Please make sure what I'm saying makes sense. So don't just go and whine me. Don't just go and drop fake emoji for me. All right, beautiful, beautiful, beautiful. Now, one of the reasons why I'm showing you guys this is because in the early stages of your career, okay, the audio is bad. Oh, sorry about that. I'm really sorry about that. Let me see if I can fix the audio a bit. Let me fix the audio. Sorry about that. Okay, is the audio better now? Somebody said the audio is gone. Is the audio better now? Okay, good, good. Sorry about that. So as I was saying, when you're starting out your career in trading, All right. It's not about, Nami right pass, 400 pips, see how my stop loss small. That's not what matters. The truth is, mentors and trainers are always going to use these things to attract you guys for mentorship programs and things like that. Okay. They are just naturally going to do that. However, for you that you are just starting, that is not the focus. The focus is to make money. All right. Because it is when you have more money that you are now able to start experimenting more. Okay, you can't have $500 to start trading, and all what you are looking for, everything you're looking for is how you'll be trading with 5 pips stop loss, 7 pips stop loss. The reality of the matter is you would have lost so much, all right, back to back, not because you are wrong, not because your direction or your bias is wrong, all right, but because you were not patient enough to allow the market play in your direction. All right, you were not patient enough to allow the market play in your direction. And that brings us back to what we said. Temperament, schedule, risk appetite. All right, temperament, schedule, risk appetite. You're going to have to build your temperament to a point where you can now be patient enough to work with better trade setups. Okay, for example, somebody who is just starting and all he has is $500, and somebody who has been trading for the past maybe 3-4 years and has already raised about $20,000, has made profit of $20,000. Between the two of you, who do you think will be able to, take more risk? All right, definitely the guy who has made profits of over 20K can risk more. Why? Because his own risk appetite is increased and he has made profits that can accommodate those risks or that risk. All right. So you don't want to get stuck up on, I must learn this strategy because the stop loss is small. Please don't focus on that. Focus on whatever it is that will give you money. The simplest way to make money. The simplest. All right. Because as you begin to make money, you have savings or stored up funds that you can now use to start, exploring and practicing and seeing what more you can still do. Do you guys get it now? If what I've said just now makes sense to you, can you drop an emoji? Let me know that you follow me and you get it. Just drop an emoji. All right, good. Why am I saying this? I'm saying this because, you see, as beginners in the early days of your career, I want to beg you, Twitter bans, Instagram bans, and the likes, they don't concern you. They really don't concern you. It's none of your business. I feel like crying here right now. But for real, it's none of your business. Twitter bans like, my mentor is better than yours. Pure price action. Naked chart trader. Since you have been trading naked charts, you don't ever impregnate the chart. If no, then waiting can cause the palaver. Why you carry on for head? You get what I'm trying to say, guys? So your assignment should be to find the simplest way for you to consistently make profit. All right? And it has to be something that aligns with your temperament, with your schedule, and your risk appetite. Okay, one thing that I've been teaching many of my students recently is, as a smart money trader, avoid setting pending orders with very small stop loss. Reason being that your entry will become a liquidity zone. All right, they are going to use you to gather liquidity and then push price back in the direction that you initially expected price to go. All right, honestly, that is what is going to happen. So I've been telling my students, what you can do is set an alert. All right, when price gets there, you will be notified. All right, you don't have to sit in front of the chart and wait or just set a pending order and walk away. All right, if your temperament does not allow it, don't do it. Okay, if your schedule does not allow for it, don't do it. All right, and if your risk appetite is not convenient, is not comfortable with it, all right, just run away from it. Okay, just run away from it. Nobody is going to hold you by your neck and say, oh, this guy is not trading smart money. It's not among the happening guys. It's not among the happening babes. That's not it. All right. So when it comes to finding your edge, in the financial markets, these 6 things must guide your path. All right, these 6 things must guide your path. Your temperament, you must consider your temperament, your schedule, your risk appetite. All right, how do you handle losses? All right, that's part of the things we've talked about. How do you handle losses? It still boils down to your temperament. Okay, you see people who after 2 losses they start swearing. Wallahi, but bottom for me signal and will renew. You hear people say a whole lot of crazy stuff and come on, signals group and start complaining, almost swearing for the admins. All right, that's because you didn't trade according to your temperament. If you know that you don't have the patience to endure certain losses, all right, all you have to do is sit back, let the market come to your own convenient criteria. Let it fulfill your own criteria. All right. And what have I said about the criteria? It must show you the direction. It must show you the entry and exit. All right. And it must be consistent and rule-based. All right. It must be consistent and based on rules that are easy to follow. Okay. So in order to to just summarize tonight's class, we've been here for about an hour, all right? But in order to summarize tonight's class, I am going to give you a simple system. All right, I'm going to show you a very simple strategy that I am certain that if you guys can work with it, all right, I'm going to give you guys 1 week or 2 weeks. Practice with that strategy, all right? If you don't get results, you can come into my DM and take out your aggression on me. All right, if you swear, you want to swear, anything, just do. I can talk like this because this is a strategy that I know what it has done for me personally. All right, personally, I know what it has done for me. So I'm going to show you that strategy right about now. And I need you guys to follow what I'm going to be doing right here. Okay, so let's come to the settings. It's a very simple system. All you need are 2 moving averages and 1 stochastics. All right, 2 moving averages and 1 stochastics. If you are not familiar with stochastics, you may want to use MACD or whatever other indicator that you're more familiar with. All right, and this is what we simply want to do. We want to set this and then this. Sorry. Then you want to make sure that the smooth thin line is also showing. So having done this, what am I trying to do next? Go to the daily time frame, or maybe any other time frame that you're comfortable with. You can work on 1 hour time frame, whatever time frame, basically. And then the next thing is you want to have your stochastics. All right, you want to have a stochastics 1433 on your chart. All right, 1433 or 1432. And this is what you're basically looking for. So this is basically what you're looking for. Whenever the moving averages are showing you it is a downtrend, all right, you're simply looking for a situation where the stochastics is overbought, all right, or has been overbought, and then stochastics has crossed and is coming down. All right, so in this situation, for example, you'd have opened your trade somewhere around here, all right, with maybe this as a stop loss, and this would have been about 1:3 already. Very simple, no checks, as you can see. So it's not like you're having to check for 16 different things or 17 different things. Okay? No unnecessary, this is the order block, I'm checking for the next order block, which one is more effective. This is just simple and direct. All right? The next thing, you also want to be checking for the points where the stochastics tells you to exit. All right? Here again, we see that the stochastics is oversold, overbought rather, all right, and it crosses down. Okay, so at all, you would have caught these trades all the way down here, at least, all right, before exiting at this point. Okay, this would have been another very sweet buy trade. You can see the stochastics is oversold, and we got the stochastic crossing. All right, you'd have sold, bought all the way down here, all the way up here. Okay, and again, you see this was another entry Stochastics is showing us that we are in a the moving average is showing us that we are in a downtrend, as you can see. All right, moving average is showing a downtrend. The red is below the yellow. All right, and what happens next? We can see that stochastics was overbought, all right, and crossed lower. And what do we do next? We sell. All right, this has been one system that has delivered amazingly well for me. All right, amazingly well. In fact, I have been able to, like I said, your system must be rule-based. All right. In fact, I've been able to build these rules into an automated system that trades for me whether or not I open the chart. All right. All I have to do is plug it up on a VPS, and it handles all my trading for me without stress. All right. Let's look at some other examples. You can see moving average is showing us we're in a downtrend. Stochastics was overbought and crossing down. Sell. All right. Moving average is still in a downtrend. Stochastics was overbought. It crosses down. Sell. All right. Again, moving averages is still showing downtrend. Stochastics was overbought. Crosses down. Sell. Okay. So you see that this is a system that has worked again and again consistently. And this is AUD card. I know somebody is saying, maybe it's because he opened AUD card because it's his favorite commodity. No. I'm going to show you one of the most volatile commodities, which is gold. All right. And we're still going to look at gold with this same strategy. So you know that there is no wayo here. There is no bio. All right. This is gold right here. The recent buy on gold. Can you see what happened? The moving averages are bullish. What do we see next? Stochastics was oversold. All right. Stochastics was oversold. And what do we get? This massive buy. All right. This massive buy, as you can see. All right. The same thing has happened again and again. All right. A sell here, another sell here. All right. Again and again, guys. Again and again. So this is a system that has consistently delivered. A buy here, another buy here, a sell here. All right. As you can see. So it's not even about, I'm trying to find which other block is the strongest. You don't need that here. All right. Am I saying don't trade smart money concepts? Of course, no. Because even from what you can see on my chart, you can see that I marked it up using smart money. All right. The markup is based on smart money. But I don't use smart money unless it is absolutely necessary. All right. Unless it's absolutely necessary. This is a sell trade on the 4 hours time frame, a sell trade on the 4 hours time frame, another sell entry on the 4 hours time frame. Why am I showing you this? You see that it doesn't even matter what time frame you're on. All right. This is a system that has been proven to work. Okay. So like I said, I want you guys to test out this strategy for 1 week. All right. Test it out. Set it up exactly the way I have shown you. All right. Trade it exactly the way I have shown you. If you don't get good results, like I have said, feel free to come in my DM and vent your anger. All right. Para for me. I will accept it. All right. I am that confident because I know how much work has gone into this system. All right. And I can basically, bet on it, what we're talking about here. Okay. So all it takes is 2 moving averages and 1 stochastics. All right. Like I said, you just need to know the trend and use oscillators for your entry and exit. So this is the settings 5024. All right. Applied to close price. You can take a screenshot of it. This is all that we use. All right. Some of you are asking me to drop the indicator settings in the group. Let somebody just screenshot it and drop it in the group. Let somebody just take a screenshot of what is on the screen right now and drop it on the group. All right, so in the next few minutes, I'm going to open up the lines so that those who have questions can easily ask their questions. Because I can see a lot of people, raising their hands. So we're going to start. Okay, sending media is not allowed. I'm going to work on that right now. Let me quickly fix that. All right, so somebody can drop the video, the screenshot now. So just take a screenshot of the settings and drop it in the group. So for those of you who have questions, all right, you can simply just tap on the microphone button, all right, so that we can address your questions. But quickly before we do that, I just noticed that my boss is here, Dr. Bills. So I don't know if he would like to just address us briefly or just say hello to everybody, so that we'll know that we have his blessing in the house tonight. So if Dr. Bills would love to just speak with us briefly, sir, the floor is yours. Okay, for those asking for the screenshot, I think I'm going to take a screenshot from my end and just share. Okay, hold on, guys. Is it clearer now? Can you guys see it clearer now? So just check that. All right, so I'm going to start unmuting people right now. Investor, please unmute your mic. You've indicated that you'd like to say something. So investor, please unmute your mic and ask your question. All right, I think investor is still thinking about his question. Akinkumi Ilori, can you unmute your mic, please, and ask your question? Akinkumi Ilori, you tapped that you'd like to ask a question. So please go ahead, unmute your mic and ask a question.
Okay, good evening. Can you hear me?
Hold on, please. Hold on, please. All right, go ahead. Ask your question, Mr. Akokumi.
Yeah, okay. Good evening, everybody. Yeah, just I didn't get, you said there are two moving averages. I didn't get the settings of the second one. I know you said one is to be 50, the 50 period moving average. And which other one?
No, on trading view, the two are just together. Everything is together on trading view. Just set the length here to 50, source close, method, then you come to method and length. Okay, and after you have changed this length, you've put it at 24, then you come to style and make sure that this smoothing line is ticked. This smoothing line, you make sure that it's ticked. Yeah, so that's the setting.
Okay, just the 50, 24. Okay, all right, thank you.
Yes. You're welcome. Adin Silva, you also want to ask a question. Please unmute your mic and ask your question. Israel or Jelabi, I'm coming to you, please.
Yeah, good evening.
Good evening.
Yeah, please. You were talking about liquidity grab and you're like setting pending orders and the rest. So, and yeah, I mean, recently I've been having like issues like that. And I mean, whenever I said pending orders, it will firstly go my way, then it will retract back to the entry, and it will take me out. Then finally, it will surely still go my way. So now that you said we should make sure we are not setting pending orders, and how are we now going to take our entry? Because I mean, from the strategy and our rules, I mean, there's no liquidity, no entry. I mean, that's the rule. So how are we going to now start taking the entries and the rest?
All right, what I said you can do is that you can set alerts. All right, set alerts. Even if you're not using the premium, the pro version of TradingView, on MetaTrader you can also set price alerts. All right, so that, for example, when price gets to somewhere around this point, all right, which is an area that you are watching. Let's say I'm watching this zone right now. I can just click on this plus and add an alert. All right.
Okay.
I can just come here and add an alert, such that whenever price gets to that point, all right, TradingView is going to play a notification that lets me know that price has gotten there. All right, so when I get that notification, all I simply do is I come to my chart and watch market structure on the lower time frames.
Okay.
You get that now?
Okay. Yeah, understood. Yeah. Thank you.
All right. Beautiful. You're welcome. Mr. Israel Jelabi, please unmute your mic and ask your question. Mr. Israel Jelabi, please ask your question. All right, I think it's still thinking about that. FK Raps. All right, please ask your question. Unmute your mic and ask your question, please. FK Raps, you indicated that you had a question, so please ask your question. Ask your question quickly before we wrap up for tonight. Okay, it seems FK Rap also does not have a question. Please, if you have a question, please just tap on the mic. All right, just tap on the mic on your trading view. Okay, so that I can pass you the mic and you can ask your question. All right, FK Raps, go ahead, ask your question. Okay, I think he's still thinking about that. Who else has a question? Please, if you have a question, just tap on the mic button on your chat or on your trading Telegram, right? Okay, Sai. Sai, please unmute your mic and ask your question. Sai, SY, please unmute your mic and ask your question.
Hello, can you hear me?
Yes, I can.
Hear me?
Yes, I can.
Please, I want you to show us the settings for your stochastic, the way you showed.
All right, I think
the way you showed the moving average.
I think I talked about that already. It's just 1433, nothing out of the ordinary. Is that clear now?
Yeah, it's clear.
All right. So is that all? Is that all you like to ask?
Yeah, that's all.
All right, beautiful. Adin Silva, I think you have another question. So please go ahead, unmute yourself and ask your question.
Yeah, thank you. Yeah, please. I was not listening to you were saying we should try this for like a week. So you were talking about the moving average, stochastic, and one other thing, which I did not hear clearly.
Just two moving averages and the stochastics, that's all.
Okay, that's all. Okay. All right.
Okay, who's next? All right, Jordan Chinon. So please unmute your mic and ask a question. Jordan Chinon. So
okay, good evening, guys. Good evening, sir. Okay, I want to ask a question, and my question goes this way: what advice would you give to someone who is having, let's say, who still doesn't have faith in his set of rules and technical analysis, but then you're always good at probably making analysis to like people, and they will still take the trade, and still yet you as a person, you're still finding it difficult to take trades based on your own rules that you've set up, but then you're comfortable giving that to people, and you yourself, you're finding it difficult to like take those trades. What advice would you give? Thank you, sir.
all right, you're welcome. Let me quickly address this in two ways. All right, there are two things responsible here. One, your risk appetite. What do I mean by risk appetite? Obviously, your problem is not that you don't know how to trade. One, your problem is not that you are not confident in yourself. That's not your problem. The summary of your problem is that because if you were not confident, you wouldn't give people setups and it will play out. You wouldn't do such. Your problem is that you are in a situation, in a financial situation where you are unable to take risks. All right. And I want you to let me know if what I'm saying right now is correct. All right. When traders are in a financial situation that is really tight, all right, it becomes difficult to even take any risk, such that an ordinary $5-10 drawdown can already start doing a whole lot of damage to your head, all right, or to your psyche, especially because you have already calculated what you want to do with all the money, including the profits that you were expecting. Okay, so Jordan, is that correct? Let me know if that diagnosis is correct.
Yes, you're correct. You're correct. You're correct.
Beautiful. So now that the diagnosis is correct, I'm going to tell you how to fix it. There are two ways to fix it. The first way to fix it is, which is the hard way or the difficult way, is to test yourself, test your limits. All right. FTMO has a free trial account that still gives you analytics on how your account fared. All right. So create that free FTMO account, trade it. It lasts for 2 weeks. All right. Trade it. See how far you can take that account. Because I believe that from what you have said so far, it must mean that your trades on demo accounts go very well. Okay. So what I would say to that is this: make sure that you take that trade, all right, and follow up on what it is looking like. All right, follow up on what your analytics tell you. All right, because it will tell you what aspect of trading you need to improve upon. All right, it will tell you what aspects or what things that you need to be able to also work on. Okay, so that is also extremely important. You just have to do that. Okay, so that's the long way. That's the long way, because you're most likely going to blow some of the accounts and then get another one and then get another one. All right. But the short way, all right, the shorter way to do that is to risk what you can afford, something you can afford to lose. All right. If you notice that, trading on a standard account using 0.01 lot size, if you notice that your stop loss is $5 and you cannot afford to risk $5 on a trade, okay, create a cent account. On that cent account, you can use 0.1 lot size, which will be 10% of 0.01 on a standard account. So your risk is going to be like 50 cents instead of $5, like what you had on the standard account. Okay, so trade that, grow the account steadily. If you cannot afford to lose $5, it means that any day that you make $5, you have just made some massive progress. Okay, so don't be targeting $50 per day. Trade a cent account, grow it steadily. $3, $5, $10 per day, grow it steadily. All right, it will help you improve your confidence to a very large extent. All right. So Jordan, have I helped you? Let me know if what I've said has assisted you so far.
Yes, you've assisted me so far, sir. Thank you,
All
sir.
right, beautiful. You're welcome. All right, Success Kachi, over to you now. Ask your question, please. Unmute your mic and ask your question. I can see every other person that has questions. Please hold on. I'm going to get to you. Shop with Genevieve, Ayo, and the other guys. Please just make sure that you tap on the speak button, all right, until I allow you unmute yourself. All right, Success Kachi, please go on.
Can you hear me? Hello? Can you hear me? Can you hear me?
Yes, I can. Yes, I can hear you. Please go on.
Okay. I'm sorry. I just joined the class late, and I wanted to ask what these indicators on the screen are.
The topic.
The what the indicators are, the indicators on the string are, and what they
Oh, okay. I already dropped the settings to the indicator as a screenshot. It's already there in the group. All right, so you can just look through it. All right, you can just simply look through it, and you should be able to work with it. It's an assignment that I just gave to test it out for 1 week. All right, and then come back with feedback. So I've dropped the screenshots for both indicators, the indicator 1 and indicator 2. Okay, both the moving averages and the stochastics.
So how does it function?
Okay, since you're just joining, I will just say I'll put this video up on my YouTube channel. All right, so I'll drop the link in the group later tonight or tomorrow morning, so you can just go and watch the video and then recap on all these things. Would that be okay?
Very much okay. Thank you, sir.
All right, you're welcome. Quincy, please unmute your mic and ask your question.
Okay, good evening. The question I wanted to ask, the previous caller just did. So, thanks so much.
Okay, beautiful. All right, so you would also be watching the recap. I'll definitely drop the video before morning. All right, Ayo, please unmute yourself and ask your question. If you still have questions, please tap on the mic so that I can pass the mic to you. Please go on, Ayo. I can hear you.
Can you hear? Okay. So now with the moving averages and the stochastics, we can get our entry and exit. But how are we going to know how to set our stop losses?
All right, for your stop loss
position our stop losses.
For your stop loss, what I usually do personally, all right, because you know I am waiting for the stochastics to cross before entering my trade. So usually I look at the last eye and then I give it a small gap. All right, I look at the previous eye and then I space it out a little bit. So if I was to enter this trade now from somewhere like this, all right, my stop loss will be somewhere around here. All right, somewhere around here, because you can see the previous eye. Let me zoom in so you see that clearly. You can see the previous eye and you can see that I gave it some space. Okay, so if the stochastics doesn't cross like this and start coming down, then I just naturally close it manually so that I won't be wasting my time too much. Is that clear?
Yeah, it's clear.
All right. Shop with Genevieve, please unmute your mic and ask your question. All right, vibes only. Vibes only, please unmute your mic and ask your question. Vibes only.
Good evening.
Yeah, good evening. How are you?
Why are we to use other blogs also? Because I can see some other blogs on the chat.
Okay, let me just say this.
Okay.
Personally, I use other blogs because I'm a smart money trader. All right. I usually do a weekly market analysis every Sunday night. So I do the analysis based on smart money concepts. All right. However, when it comes to entering my trades, all right, even when price gets to my order block, I don't just jump into the trade. All right. Price gets to my order block. What do? I go to the 5 minutes and look for an entry like what I have just explained. So on the 5 minutes here, I will be waiting for price to come down, all right, where the moving averages would have crossed, and then price will come back up, stochastics will get overbought, and then I can sell all the way down. Do you get that now? Um, Vibes only. Do you understand that now?
But I want to ask, do you use the fib on lower time frame also?
Not really.
Okay. So you only use it on higher time frame.
Yes, yes, please.
Okay, sir. Thank you very much, sir.
You're welcome. You're welcome. All right. So, AY Lee, please unmute yourself and ask your question. Laura and Mr. Akinkumi, please hold on. I'll come back to you.
Yeah, good evening, sir.
Yeah, good evening.
Good evening. Yeah, I wanted to know if you are using RSI on this chart.
No, there is no RSI on this chart. I do not use RSI on this chart.
Okay. So what do you use to confirm your overbought and oversold, sir?
That's the stochastics indicator, and I already gave the settings. I sent the screenshot in the group.
All right. Thank you, sir.
Yeah, you're welcome. You're welcome. So, up next, Mr. Is it Mr. or Miss Roseshi? I don't know how to pronounce that, but please unmute your mic and ask a question. Roseshi or Rosishai or whatever that name is, please unmute your mic if you have a question. Mr. Akinkumi, all right, please unmute your mic and ask your question as well.
All right, thank you. I also wanted to confirm, please, what time frame is best to use for this particular strategy? Is there a particular time frame that is best, given the fact you are using a 50 period moving average? Then one of the last speakers also was asking a question, and then when you were explaining, you said you scale down to the 5-minute time frame to enter your trade. So is it that you do analysis on the higher time frame and then you come down to a lower time frame like the 5-minute to take the trade? Can you please just give more insight on that?
All right. What I meant was in response to that guy's question, talking about how I trade order blocks, since I don't use pending orders. All right. So for me, what I do is when price gets to the order block, I wait for a reaction like this. All right. This same kind of reaction, moving average telling me that, for example, here now we are waiting for a sell, right? So I go to the lower time frame because I'm waiting at the order block. All right. So I go to the lower time frame and I wait for the moving average to start indicating that we are in a downtrend. All right. And then the stochastics should be overbought. So I enter based on that. Okay. So if you want to do the same thing for your trading, all right, with the moving averages, you can. But talking about the best time frames to work with, I think personally, I prefer time frames from 15 minutes to 4 hours. All right, 15, 30, 1 hour, 4 hours. I use them quite comfortably. All right, but if you are a more patient person, you may want to also try it on the daily time frame, even though I wouldn't advise that so much. Have I answered the question, sir?
Yes, you have. Thank you. Thank you very much.
You're welcome. So, Shop with Genevieve. Shop with Genevieve, please unmute your mic and ask your question.
Hi, hello. Can you hear me now?
Yes, I can.
Okay, good evening. I'm new to this forex trading, though I've been joining the classes and I've been taking notes, but I've not seen or I've not joined a class where they tell us like the apps we need to download. I've been hearing you guys talk about the Mets 4 and is it Mets 5 or 3, but I don't know. Can I have like the apps to download so I can be following up? Because I'm not understanding things. I'm just jotting down things, but I'm not practicing it.
Okay. Well, you can start with TradingView. All right, tradingview.com. I'm going to drop the link. I'm going to drop the link. If you use an iPhone, then it's going to be a tricky one because you will not be able to download MetaTrader. All right. But I'm dropping the names nonetheless. MetaTrader 4, MetaTrader 5. There's also CTrader. Different ones, but the most popular ones are this 4: TradingView, MetaTrader 4, MetaTrader 5, CTrader. Those 4.
So you said if I'm using an iPhone, I can't download more than one app on the phone.
No, you can't download MetaTrader 4 and 5 because they are no longer on the App Store.
So I need an Android phone.
An Android phone, a PC, or you can just use TradingView altogether.
Okay, I can use the laptop.
TradingView is an online platform. Yes, of course. And this is TradingView. It's completely free, so you can also use TradingView.
All right. Thank you very much.
All right. Would that be all?
Yes, I'm waiting for the link.
All right. I dropped it in the group already, so you can check up on it.
All right. Thank you very much.
You're welcome. Mr. Jordan, all right. Please go ahead, unmute your mic and speak. Ask your question.
Okay. I want to ask a question. What advice would you give to a trader who is having this kind of analysis paralysis as a result of too much information and too much garbage? Most of all these self-learners that probably don't have enough funds to go for a proper mentorship, that just end up, watching tons of videos and reading tons of books, and at the same time you're confusing yourself. Like, what advice would you give to the younger self?
All right. The easiest answer would be get a mentor. All right. That would be the easiest answer. However, in the event that the person feels like they don't want to get a mentor, I would say detach from everything that you think you know right now. All right. And then go back to the very basics. Break down everything. The truth is, every strategy, no matter how big or small, every strategy contains just 3 things. All right. The trend, the direction, the entry, the exit. That is all any strategy has. Every single strategy, that's all they have. The direction, the entry, the exit. All right. So it's not until you overstress yourself. All right. Just break it down to the basics and allow yourself relearn. All right. Unlearn, then relearn the things that are important. Okay. And that's why I've shown you guys this strategy tonight. It's absolutely simple. It's easy to remember the strategy. Very easy to remember the strategy. All right. And it's something that I'm sure that many of you guys can be able to work with, regardless what commodity you are trading. All right. Is that clear, Jordan?
Yeah, yes, sir. It's clear. It's clear. It's clear. It's clear.
All right, beautiful. Okay, who else has a question? Please, please. For those of you just joining, don't rush. All right. The video is going to be released on YouTube later tonight. All right, and the link will be dropped, so you don't have to stress yourself too much. That will be done. Mr. Ben, regarding how to set it up on MetaTrader, give me a minute. Let me do something about that. Hold on, please. I'm coming. I'm trying to set up my MetaTrader. All right, like I said about the SL, since I wait for stochastics to cross, all right, it means that I can use the previous high or low, all right, for my stop loss. So I just basically use the previous highs and lows for my stop loss. Okay, hold on, please. I'm setting up my MetaTrader so I can show you. Okay, so let me do this. All right, can you see? Can you see this? I'm going to show you how to set it up right now. Okay, I'm going to show you how to set it up right now. So all you simply want to do is okay, come here, go to trend, moving average, all right? And when you get to moving average, you go to period, all right? The first one is period 50, simple close, all right? Let's use color red. So we have that trend line, that moving average line. Then we'll do the next one, moving average, all right? Period 24, color yellow, all right? And then you apply it to the previous indicators data, which is the moving average you just added. All right, so previous indicators data, and then click. So that settles it. Is that clear? Mr. Ben, you said it's not clear. I just took you through the entire process, all right? I just did. You had the first moving average. Okay, if that's what you want, I'll drop the screenshots. And if you still don't understand it, you can just basically go through this video once again. You should be able to understand afterwards. Okay, let me just drop the screenshots. That's the settings for the first moving average. Then the second moving average. Okay, so that's it. Is that clear, Mr. Ben?
Yes, thank you. Thank you very much.
All right, you're welcome. All right, who else has a question they would like to ask? If you have a question, please just tap to speak. All right, Mr. Ben. Yeah, Mr. Ben, you tapped that you have a question.
Sorry, it's a mistake. Sorry.
Okay. Who else has a question? Quickly, before we wrap up for tonight. For those who have requested that we go over it once again, I'm just going to drop the link so you can watch the video from start, right? How the session started, all right? It's going to do you a whole lot of good to go through everything in detail because we've talked about a whole lot of things. The topic is how to find your own edge, all right? Your trading edge. You know, how to become a trader that knows what makes them special. Okay, so it seems there are no questions. Okay, Memunat Musa, please unmute your mic and ask your question. Memunat.
Good evening, sir.
Yeah, good evening.
Sorry, please. I'm not really new to trading, right? But my problem is this order block and liquidity. So I'm not really clear about it.
Okay, that's good. You can go through this Telegram group, all right? go to the media section of the Telegram group. All right, scroll to the beginning of the group. You will see videos from sessions that we have recorded, all right, that covers all of these other blog topics.
Okay. Thank you.
You're welcome. All right, Mr. Full Stop that is using Telegram Pro or Telegram Premium, please go ahead and ask your question. I think you wanted to ask a question initially. All right, can we take the last question for tonight? If you have any question, please just click on the speak button so that I can be notified and I can pass the mic to you. All right, Mr. Silva, please go ahead and ask your question. Adine Silva, please go ahead and ask your question, please. All right, it seems to me that that was a mistake too. Do we have the last question, please, so that we can wrap up for tonight? Okay, Adine Silva, go ahead with your question.
Network. Yeah, I don't know if you hear me clearly.
Yes, I can hear you. Please go ahead.
Hello? Yeah, please. I said, I don't know if it will work on all pairs, including the currencies and volatility, gold, and all of them.
Yes,
The
bro.
strategy.
Yes, it does. Do you want us to look at some indices like US 30 and the
Yeah,
likes?
I mean, I won't mind though. Yeah.
All right, give me a minute.
All right.
Okay, so for those of you who would like to reach out to me on WhatsApp, you have a question, you want to follow up mentorship or whatever. All right, I'm just going to drop my contact. All right, especially for those who have questions. However, please note I'm a married man, so I cannot answer questions at some certain points of in time. All right, especially at night. Okay, so if you don't get a response from me so quickly, just hold on. As soon as I get your question, I would address it. All right, so this is my number 2314164 So let's go to the indices. All right, so you can be the judge of it yourself. Oversold in a downtrend, sell. Overbought 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 in a downtrend, sell. As you can see, so it just goes on and on and on like that. Okay, so this is US 30. Let's look at US 500. So you know that there's no mago here. Okay. Overbought in a downtrend, sell. 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 Overbought, sell. Overbought, sell. Overbought, sell. All right. So you see that even at this point where it crossed and was looking down, but there was no real entry. What do you notice that happened next? The stochastics crossed again and told us to get out of that trade ASAP. You can see that on the very next candle, the stochastics crossed back up, telling us, bro, leave this trade right now. Okay, so I want to believe that I've been able to address your question.
Yeah, sure.
All right, good.
Thank you.
So for those who for those who requested for my number, because I'm seeing some, okay, I think someone just asked again. So this is my number. All right. But like I said, please be patient with me. If I don't respond to you immediately, just know that I am most likely busy, all right, or asleep, because I sleep too. All right, so that's the contact. It's a Nigerian number, so obviously it's going to be +234 802314 1642. All right, so I believe that's the last question for tonight. I want to say a big thank you to everybody for sticking with us till this particular point in time. All right. Thank you for joining us. Thank you for your time. Thank you for at least keeping me company this very cold evening. All right. So for those of you who joined us quite late, the video is going to be available on the YouTube channel. All right. I'll drop the link so you can check that out and then get to know what exactly all of the things we've discussed tonight are about. Okay. So without further ado, thank you so much for joining us. Have a fantastic rest of the night. God bless you and see you next time. Bye-bye. Quickly, please, I would appreciate if you can drop a review, all right, a short review. How was tonight's class? Did you enjoy it? Was it meaningful? Just drop a quick review in the group, all right? I will be watching to see your review. Thank you so much. God bless you. Bye-bye.